If you're thinking about buying a home in 2022 and aren't really sure where to start, here's an overview of the home buying process for you. Hey, I'm Rose Gonzalez and I'm a realtor in Northern California. And in this video, we're going to share with you what you need to do to see how much you qualify to buy, what happens after you qualify, how to find a realtor, and what the home buying process actually looks like so that when you do find that perfect home, you'll know what to expect. The first step is to talk to a lender. If you don't have a lender, make sure to ask family or friends who have recently bought a home for their recommendation. You can even talk to a lender at your bank like Wells Fargo, Chase, Bank of America, or anywhere you have a checking account with. Or you can also reach out to me and I'd be happy to send you to a few lender partners we work with. All right, what to expect when applying for a loan. When you talk to a lender, they're going to ask you about your income, your credit, and how much money you have in the bank, in your retirement and stock accounts, and how much you plan on putting down. They can then give you a pre-qualification letter based on this information and give you a ballpark of what you can afford and what your payments would look like. But I wouldn't stop there. In this highly competitive market, you want to take it a step further and actually get a pre-approval letter. This is an in-depth look at your finances with supporting documents. What this means to you is you'll need to fill out a loan application, the lender will run your credit report, and you'll need to provide them with things like pay stubs, bank statements, tax returns, and retirement and stock account statements. They will then send this to the underwriter to make sure that everything checks out. This makes the whole home buying process run smoothly, and the sellers prefer buyers who are pre-approved over pre-qualified because they know that they're solid buyers and won't really expect any hiccups along the way. Now, what you want to talk to your lender about is monthly payments. Figure out what your monthly payment threshold is. You can be pre-approved for an amount higher, but if the monthly payment is way too high for you, you want to make sure that you give the lender that top monthly payment that you can afford and they can adjust your purchase price to reflect it. Also, remember to look at the whole payment, including taxes and insurance. The lenders usually call this PITI, principal, interest, taxes, and insurance. Now, if you're planning to shop around for different lenders, you're going to want to do this within a couple of days of each other because rates change on a daily basis. If you're shopping with different lenders a week apart, it's not really going to help you out because rates for all the lenders will have been completely different. Also, each lender will need to run your credit report. So that it doesn't affect your credit score, the credit bureau gives you 45 days from the first time one lender ran your score to shop around for rates without impacting your score. Once you get that pre-approval letter and you understand all the fees and how much money you need to come up with to close on the home, it's time to find yourself a realtor. You'll also want to ask your family and friends for referrals. And if not, if you're outside of California, we can also refer you to our preferred realtors across the United States. You'll also want to talk to a couple realtors as well because you may feel more comfortable with one than the other. For the most part, all realtors have the same access to all the homes available in their market. You want to make sure that when you're picking the right realtor, you get that comfort that they're going to explain the whole process to you. Now that you've found your realtor, it's time to find your new home. When you meet with a realtor, they'll go over all the things that you're looking for in a home. Neighborhood, how many bedrooms, bathrooms, square footage, and anything else that you'd really want in your home. You'll also want to let them know what are non-negotiable and those things that are nice to have but are not deal breakers. They will start you on an email drip of all the homes that match what you're looking for. You can look at homes with your realtor or check out houses on the weekends at open houses. When you find a house that you just absolutely love, your realtor can see if there are any disclosures or inspections available, if there's an offer due date, and the comps of what houses are selling in the area. This will help you and your realtor determine the price and terms for your offer. Now that you're ready to write your offer and have looked at the comps, you want to decide how much you actually want to buy the house for. Your realtor can share with you how the market is in the area because all areas are very different. There are areas where homes are going for $100,000 over asking, but then there are areas that are not as high in demand where you can actually get in an asking price or just a little bit over. But your realtor can help you understand what list price versus market price is for that home. Now it comes to terms. This is really important. Do not just do a no contingency offer because you think that's the only way to get a home. You need to really understand what that means. There are 3 contingencies that protect you from losing your deposit. Those are appraisal, loan, and buyer's inspection contingencies. The appraisal contingency protects you if the home does not appraise at the purchase price. Let's say you bought a house for $800,000, but the home appraised at $790,000. That's a $10,000 appraisal gap. With an appraisal contingency, you can ask the seller to go down in price and negotiate. If they decide not to, you can back out of the contract without losing your deposit. Now, if you remove your contingency, you will have to cover that appraisal gap, and if you pull out of the contract, you are at risk of losing your deposit. The loan contingency is, let's say we're 2 weeks into the home buying process. The interest rates jump up to 5% and you can't afford that monthly payment anymore. Well, you can back out of the contract, but if you remove your loan contingency, you could be at risk of losing your deposit. And the third is a buyer's inspection contingency. This is really important because some people think that removing this is just the actual inspections, but it's not. It's making sure that you review everything available on this home. There are 3 inspections we always recommend, and those are home, termite, and roof. But on top of that, you want to review the seller's disclosures, the preliminary title report to make sure there's no liens on the home. And if there's an HOA, make sure you review the HOA docs because some buyers didn't read their bylaws and removed contingencies and found out that the HOA rules were super strict and they couldn't back out of the contract without losing their deposit. So make sure you talk to your realtor and get as much stuff about the property before you even consider removing this buyer's inspection contingency. I'm sure you caught on that I've mentioned something about deposit. I've had a lot of people tell me that they didn't even know that they had to provide this upfront because their realtor didn't tell them. But when you write an offer, there's usually an earnest money deposit. It's basically letting the sellers know that you're a serious buyer and here's some upfront money that I'm giving you as collateral that I will not back out of the contract unless something major happens. This money will need to be given to the escrow company within 3 days after your offer is accepted, and the sellers will only get this if you back out of the contract outside of contingencies. As long as you're within timeline and you find something major that you don't like, you can get your deposit back. But if everything checks out, this money will go towards down payment or closing costs. Now that you found the house, your offer was accepted, and you have done all of inspections and appraisal came in at value, what happens now? The lender will collect more updated documents from you because maybe your bank statements are old and they need updated pay stubs. They will send all those updated documents as well as the appraisal back to the underwriter for full approval. When they get a full approval, they will then send you a disclosure that will trigger a 3-day right of rescission and send the escrow company your loan documents that you will need to sign. The escrow company will send a notary to you to sign these documents. Once you sign, the notary sends it back to escrow sends it back to the lender reviews it. If everything checks out, then they wire the loan back to escrow. They call this funding. Once they receive the funds, they will then send your deed of trust to the county recorder's office, and once they confirm that the document is recorded, you are officially a homeowner. You can then coordinate a day to meet with your realtor to get the keys of your new home. I know that was a lot of information, but I think if you at least know what to expect, it makes the process a lot easier and less scary. So I hope you found this video helpful. I have also put a link below to our home buying guide that summarizes everything that I shared in this video. And of course, if you have any questions, please comment below or reach out to me directly. Thanks again for watching this video. If you haven't subscribed to our channel, give that subscribe button a little love and we'll catch you on the next video. Bye.